Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Dr. Merav Ozair, global leading emergency technologies expert, and Chris Brodersen, managing director of the blockchain practice at EisnerAmper. And we're here to discuss how tokenization is profoundly impacting the TradFi sector and why early and careful consideration related to regulatory and reporting requirements is critical. It is great to have the both of you with us. Welcome to Trade Talks. And Merav, before we get into the conversation at hand, let's take a step back for a moment. Explain to us what tokenization is and why TradFi is starting to get more interested in it.
Okay, so let's first define TradFi, DeFi, and tokenization, and how it is basically the bridge to these two. So we have TradFi, which is basically traditional finance. So what we know about traditional finance, all the systems that we know, the services, the products, for better or worse, that's what TradFi stands for. And then you have the DeFi, which is decentralized finance, which is basically taking all the what we know from traditional system, the product, the services, and codifying it, putting it, taking all the rules and components and automating it. So it's basically, in a nutshell, you can think about it as self-executing product and services, runs on the blockchain, has all the benefit of the blockchain, which is immutability, transparency, instantaneous, no intermediaries, instantaneous settlement, 24/7, and low to no cost. So that's the benefit of DeFi. And we have a TradFi, and tokenization kind of sits in the middle, because tokenization is basically taking any assets, could be tangible or intangible, and tokenizing it. Tokenizing it meaning that you issue a digital token that runs on the blockchain. Again, has all the benefit of the blockchain, etc. So and it represents, and the value of it is the value that the asset that it represents. It could be art, it could be real estate, it could be private equity, like KKR. They tokenize one of their funds. So if you think about it, now why is, for example, Larry Fink is so interested about tokenization, because he's like, they basically are the largest ETF, other than being the largest asset managers, but they're also the largest.
So what's the benefit of tokenization in 15 seconds?
So if you think about tokenizations, if you think so first of all, it increases the accessibility, the liquidity, and the efficiency of all of these transactions. So you can take every security that you have today, all the stocks that you have now trading here on Nasdaq, and tokenizing it, and that brings more liquidity, the fractionalization, the instantaneous settlement, the low cost, no intermediaries, and so that efficiency, this is what everyone is seeing, and this is why all this.
Why there's interest there. So Chris, I'm hearing a couple things here from Merav, liquidity being one of them, efficiency, transparency, and so forth. However, as you know, in the TradFi space, we're one of the most heavily regulated sectors out there. So what are some of the challenges that exist there as regulators are trying to figure out what this marriage looks like with DeFi and TradFi?
Well, I think the first thing that you have to look at is, in my mind, tokenization is really not much more than the digital dematerialization of real-world assets, right? So once you define what is the token, what does it represent, what are we trying to do with it, then you can start to think about all of the things that you have to do from a business process perspective across risk and controls, reporting, who are the regulators that we're responsible to, how is this token treated from an potentially from an IRS perspective, and all of these different things. But all of that has to be thought about up front. We've seen many companies that are trying to retrofit what they did in the past into what they think the regulatory regime is looking for today.
If that framework doesn't exist, what choice do they necessarily have, though?
Well, then really the only choice that you have is to get the best legal counsel you can, right? Get the best subject matter expertise that you can across all those various functions, regulatory compliance, what have you, and try to, start to build some fences around it so you have defense to say, at least if something goes wrong, we tried to think about this stuff.
Right.
But I mean, to think about it from a regulatory perspective, I don't think that we need to reinvent the wheel.
Right.
Because at the end of the day, you mentioned that yourself, basically what is tokenization? It's an asset, any asset could be real estate, and we already know what the regulation for real estate. We already know what the regulation for security. We already know what the regulation for any of those. And it's just a different rail and technology. It's like, when Nasdaq came about and everything, all this trading became digital, does that mean that all the securities laws that we had before are vanished? We don't need them? No. I mean, and the fact that it's, everything is digital today rather than, the outcry that we had back, I don't know, 50 years ago, it doesn't change anything. I mean, even when Gensler, is always going back to the how we test, this is something that way back, and we're talking about cryptocurrencies and others, he's always saying, but we already have laws. Yeah, we do.
Right.
So we don't need to invent the wheel. And I think that even the Bankers Association, the American Bankers Associations, they had a stand on that they said that whatever regulations that are going to be in this space should be technology neutral, which is true because you have to assess them from the risk of the asset that they represent. And we already know what are the risks. We already know the regulations that are associated with these assets. Now it's different rails, that's all. So don't, think that, because it's blockchain, though, it changes the entire risks.
The profile of it. It's interesting, Chris, I'm thinking to myself, I can't remember when we went from stock certs to street name, right? I mean, did anything fundamentally really change in terms of regulation, I guess with the exception of back office and record keeping, but it was digital. Right,
exactly. So I'm having a hard time understanding why making this leap is proving to be so difficult.
Right.
And there are some things that we have to think about from a regulatory perspective, especially around if we're going to move into a more disintermediated world where we have these intermediaries whose roles are either being negatively impacted or eliminated. How do we fix things when they go wrong?
Right.
And I think that's one of the areas where everybody's really struggling right now to say, okay, I have this clearinghouse, I have this, I have that, and if something goes wrong, I have somebody in that chain to point to. In this brave new world, how do we fix it? And so I think this is where people are really are struggling.
Yeah, but that's you can say about every technology.
Of course.
And this is why you need the way I see it, and I've mentioned that many times, is that the combination of the integration of all technologies, AI and tokenization, then wrote about, that how AI can support tokenizations, because if you think about it, tokenization, basically, it's good for
compliance. Right? Would you consider it like an option on an equity? Is it a derivative of a product?
Not necessarily.
Right.
Okay, so maybe that's why it's not necessarily
it's not a derivative because it could be a security as a security, but runs on, on these rails of blockchain. Even Larry Fink, that's what he's saying. Like he's going to take all of his ETFs and going to run them on the blockchain. That's how he envision, whatever his company, where it's headed, because he said, we don't need mutual funds anymore. I mean, the next generation will be just ETFs because that's how he sees it.
So there's an interesting article that was published recently, the Fed Window, if you've ever read that magazine, talking about this concept of dematerialization and tokenization. And one of the things that they point out in there is that very often the reason you want to do this is because you're looking for efficiencies.
Exactly.
And you're looking for the ability to have programmable tokens that will automate some of the business processes that today are very expensive and manual.
Yeah.
So it's a little frustrating because I think the challenge, like I said earlier, is that token is a broad term. And so I think people need to start putting some other terminology around the specific token. Security, utility, governance, whatever it is.
See, and that's why I think perhaps, when it comes to blockchain technology and the infrastructure, Bitcoin digital assets, it was really the first thing mainstream that was associated with it, although, sitting here we understand all the other industries that can leverage this technology. But to your point, token, the name Bitcoin, it sounds physical, like coin,
So
token.
just say digitization.
Digitization. Yeah, but you know how hard it is to reverse people's way. It's almost like, global
But
warming to
it's
climate
like,
change.
when people are not talking about blockchain, they're talking about Web3 because, not cryptocurrency, they're talking about digital asset because it sounds a little bit less, I don't know, with less bad connotations.
Right. Yeah, but that's education, though. It's the industry's responsibility to help people understand that blockchain is the underlying infrastructure. Like TradFi, we have market structure.
Right.
This is the market structure for the digital.
Right.
Yeah.
This is the opportunity to re-architect certain parts of the middle and back office.
And another thing that we need to educate is that these rails are good for regulation and compliance because it's more transparency, more traceability, more trackability of whatever, and you can program and code, all the rules that you have already within this token. So no illicit activities can happen. And Fink himself even says that he's going to completely eliminate all illicit activities if everything runs is tokenized. I don't know if you're going to completely eliminate, but mitigate for sure. Because
so Chris, you were talking about before going from a paper world to a digital world, from stock search to street name, right? I wonder if it's almost a generational thing where we're so used to record keeping. It's been so ingrained. I mean, we see this in the healthcare space as well. Perhaps it's not necessarily who do I call if something happens, but maybe it's a skill set that evolves. Maybe you have to be more of a technologist than a back office person.
We definitely need a shift in thinking and a shift in skill sets. But if you look back to the late 60s when the banks got together and created the DTCC to do the first set of dematerialization, people don't remember that took 4 years just to get any sort of critical mass, and you still had the vast majority of the smaller banks outside of that ecosystem. So you had this dual system of pure paper-based and then the new form of electronic. And what did it probably take until the end of the 70s to really get everybody on the same page? I'm not saying that's going to happen here, but what I'm saying is these things are evolutionary, not revolutionary.
Yeah, and I think it's a good point to make where you exercise some patience because at the end of the day, if, it's almost like being on the cloud. You really can't be competitive in this space unless you're on the cloud and have these advanced technologies. So, Merav, at some point, it's going to be a counterparty risk to your own firm. From a counterparty perspective, how can you trade or do business with other firms if there's not some sort of advancement in the tech stack?
Yeah, I mean, let's put it this way. Everybody, especially now with what's happening, with AI and everything, is going to all companies will have to adapt to the use of AI. So AI and now with tokenization, they kind of go hand in hand, the way that I see it. So everything is going to be more and more technology based. And if you're not, you're going to be left behind, and you're going to be kind of obsolete at some point. So, I think that whoever is in financial industry or any industry is starting to understand that. I have to, get into this technology, whether it's AI or tokenization or blockchain or whatever other technologies. Otherwise, I will be left out.
Well, think about it. Even a more recent example, T+1, right? We just made that shift to, what was it, May 31st, the day after Memorial Day, whatever it was. It was smooth. I've covered it. I don't recall hearing anything where it was that catastrophic. And you're dealing with multiple jurisdictions around the world. I feel as if the industry is better equipped to deal with these integrations.
Right. Here's the analogy. People talk about blockchain technology and the next generation of the internet, right? In the early days of .com, we imagined the day when we'd push the button and the dog food would show up. But it took us 20 years to get there, right? I'm not saying this is going to take 20 years because we're much further ahead in terms of networking and security and everything else.
And the acceleration.
But to your point, it's going to take some time. There has to be some level of patience here.
Right. Well, okay, so let's call it in the last 5 minutes here. We know what the challenges are.
Right.
We know there's kind of that gridlock between the advancement of technology, what is it, Moore's Law? Like every iteration is quicker than the next. And the regulators being able to catch up. Is there any light at the end of the tunnel? Are you starting to see frameworks being developed? So what does that look like right now?
So what's happening is, at least from where I sit, there are a lot of new companies that are emerging, and they are in the process now of really legitimizing themselves. both from a legal and a regulatory and a business perspective. But to do that, you have to go back to what I said in the beginning of this segment, which is around understanding your risks, your controls, all these things. I hate to tell you how many companies we've seen come to us and say we need an audit. Typically when they need an audit, if they're crypto or crypto native, it's because one of two things. They either are trying to raise money or they need a regulatory license. And in every single instance that we've looked at them, and these are companies with some very serious revenue streams, none of them were ready for the audit because they didn't think about all of those things when they were a smaller organization on the front end that could have easily been avoided now in trying to untangle it and get the results that they need.
Yeah. But these technologies, whether it's tokenization or blockchain and AI, they're going to assist our audit.
Yes.
So putting them in place is basically going to cut the cost and cut all the problems that they have in audit.
But just to push back here a minute, Merav, that doesn't supersede the fact that there has to be a risk management strategy.
Right.
Yeah, I mean, in the startup phase might not have even had exposure, understanding what that looks like.
You know that I've been an advocate for responsible AI and risk management.
No, but I mean,
all
even
of
just
that.
basic company governance and risk management.
I mean, definitely, you must have risk management because that's the ABC of any company.
Right.
If you don't have a risk management in place, you basically can exist. No matter whether it's, especially with technology, because technology has its own problems, its own challenges.
But
we do need that.
That goes to the skill set change.
Right.
So several years ago, people were saying, oh, this technology, because of its transparency, is going to wipe out the audit function. I would argue otherwise. I would argue it means that the auditors have to learn how to audit in a different way.
Exactly. So it's a different type of audit, which now, and also auditors now are using these tools to make their work more efficient.
Correct.
So it's a different, twist on it. It's not like things are going to disappear. It's like when people are saying, "Oh, I'm not gonna, have a job anymore." No, you're going to have a different job.
Right, well, look, horse and buggy mechanics aren't relevant right now because we have a combustion engine, well now electric vehicles. But the fact of the matter is it creates other jobs and other skill sets in other areas and technicians that didn't exist before. So like I said, I feel like the not just finance, but industries in general are processing this advancement in technology better perhaps than the internet or worrying about jobs being taken away because we understand it a little bit better.
But also you have you also have a generation now is that entering the job market is already used to this technology. So they feel more comfortable with it. Okay, so whether it's blockchain or AI or cloud or whatever you want to call it, they feel comfortable with it. So if you tell them, okay, we're going to use now this type of rules and with this technology, they feel more comfortable. It's not like, when you had to, work with people in the 80s or 90s when technology was like, oh, what? Right. It's like, a different animal, entering the room. For them, it's not. Yeah. So, but I think that even like the older generation, if you want to call it, they're getting used to it. Yeah. I mean, in fact, there was a research that in fact showed just the opposite of what we were saying. I mean, we would say, oh, and it's Gen Z, that are more efficient when it comes to AI and all of that. But there was a research that showed, in fact, the ones that are using it more efficiently are in the bracket of the 30 to 40, and the next bracket will be 40 to 50.
Oh, 100% to make operations more efficient.
So you would say that, oh, it's probably the Gen Z. No, it's in fact, those who are already in the job and understand that these tools can help them.
So we have one more minute here, Chris. I want to give you the last word, and I think it's a great point that Merav brings up, where diversity of experience is important as well, right? And I think that it lends to the marriage that you're seeing with these technologies in this space.
Right, exactly. And it's also diversity of thought.
Right.
It's being open to the idea that, again, do we want to tokenize this thing? Why are we tokenizing it? How are we going to do it? What is the benefit? And then what are the risks? Right. And that's really what it boils down to. Not every asset is ripe for tokenization at this stage of the game.
Right. Great point. And we'll leave it on that. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.